Hey YouTube, Happy New Year, Happy 2020. So we did it. We beat the market in 2019, but only by a hair. I will get into the details of our performance in just a second. So at the end of 2019 and at the beginning of 2020, this is what our portfolio looks like. We have Amazon still as our top position at about 19%. Amazon had a slow 2019, but that means it is likely poised to outperform the S&P 500 in 2020. I am still very confident about Amazon and its prospects, especially in e-commerce, cloud computing, and advertising. Next, we have Facebook at about 15%. Facebook had an amazing 2019, but I still think it is a little undervalued, and so I plan to keep holding Facebook at the current rating. Next up, we have Google at about 12% and the other class of Google at 4%. So in total, we have 16% for Google. Google had a decent 2019, but Google is a powerhouse. It has YouTube, Android, of course, Google Search, Google Maps, Chrome, and a lot of other interesting projects on the side. I plan to hold Google at the current rating for 2020, and I don't expect to make any changes to the top 3 positions. So together the top 3 stocks make up about 50% of the portfolio going into 2020. The performance of this portfolio in 2020 will largely depend on these 3 stocks: Amazon, Facebook, and Google. Let's look at the other top stocks in our portfolio. We have Visa at about 8%. Visa had an amazing 2019 as well. We have Booking at about 7%. Booking is one of the stocks that I feel I need to lower my exposure to. I had already thought about this in 2019 at the beginning, but I'm very hesitant to sell any shares because I usually get it wrong. So I did not sell any Booking shares and I did not trim my position. And going into 2020, I also plan to probably not trim my position, but I am not adding any more Booking shares at the moment. I will feel a little more comfortable with Booking at about 3 or at the most 4% of the portfolio. Let's see how it goes in 2020. Baba, or Alibaba that is the next biggest stock in our portfolio at about 6%. Then we have MasterCard at about 4%. Alibaba and MasterCard had a great 2019 as well. I think they delivered more than 50% returns in 2019 alone. Next up, we have Intuitive Surgical at about 4%. The top 8 stocks in my portfolio make up nearly 80% of this portfolio. So this is a concentrated, high conviction portfolio. We believe strongly in these stocks. Let's take a look at the rest of the stocks in the portfolio. So we have some of the index at 3%. This is the S&P 500 index, and in hindsight it was a good decision to include the S&P 500, although I think one mistake I made in 2019 was not buying more of the Nasdaq ETF. The Nasdaq ETF, as we will see later in the video, had an amazing 2019. I had Apple at about 2%. In hindsight, of course, it seems like I made a big mistake in not buying Apple. But I don't have as much conviction in Apple as I do in the other stocks. So I am just maintaining my Apple position at about 2%. Nike at 2%, Costco at 2%, Boeing at 2%. I think Boeing was another mistake I made in 2019. After the second plane crash, when Boeing dipped to about $360, I thought that this would be a temporary setback for Boeing. So I decided to buy more Boeing shares at that time. Little did I know that the grounding of the 737 MAX would drag on for the entire year, and it has really created big problems for Boeing. It has lost its CEO and it has taken on much more debt. Boeing is not as strong as it was going into 2019. But I think Boeing over the long term is still a good company. I may buy more Boeing if it dips to around $315 or below. But currently, I am still holding on to my Boeing shares. Next, we have Comcast at 1%. We have S&P Global at 1%. S&P Global is another company that I wish I had bought more of in 2019. S&P Global is a company I understand well and is riding several tailwinds, including the tailwind of passive investing. Along with Moody's, it also has a monopoly in the debt rating market. And with the Fed cutting interest rates, that has been a boon to these companies because there are many more companies that are looking to issue debt at low interest rates. And to do that, they need to go to these credit rating agencies. So I'm looking for opportunities to buy more of S&P Global. I have Expedia at 1%. I have Welltower at 1%. Disney at 1%. Upwork at 1%. Upwork has been a disappointing stock so far in the last part of 2019 when I decided to buy it. But I'm still confident about Upwork over the next few years. So I don't plan to sell any more shares. Actually, I've not sold any shares. But I do actually plan to sell more put options if the price drops further. And that's what I've been doing as well for the last few months. I have JD at 1%, Berkshire Hathaway at 1%, FedEx at 1%, and recently I also sold some put options on Baozun. And my cash holding in the portfolio currently is at about 2%. So we have a total portfolio value of about $168,125.27. Our 2019 performance is 31.7%. A good result, but I think if I had not made some mistakes in 2019, it could be even higher. Let's see how it does in 2020. Over the last 30 days, this is the history of the account. We collected some dividends. We deposited some cash. We collected more dividends from Boeing. Earlier it was from Visa. We sold a put option on Upwork as mentioned and collected about $100. We collected dividends from S&P Global and we collected some dividends from Expedia. We did not buy or sell any stocks in December. Every month I compare the performance of my Project 1 million portfolio against some of the best ETFs and the best funds I know of. So let's take a look at how Project 1 million did against these benchmarks. So we have the S&P 500 ETF, we have the Nasdaq QQQ ETF, we have the Vanguard Information Technology ETF, we have the Expanded Tech Sector ETF, and we have a good mutual fund called Berkshire Focus. So the top performing index was Vanguard, and then it was IGM, followed by QQQ, the S&P 500, and Berkshire Focus. Look at that fall in Berkshire Focus. Berkshire Focus was beating Project 1 million through most of the year, but it had a bad fall in the month of December. The better way actually to look at the performance of these benchmarks will be to look at the total return price, which includes dividends reinvested. So let's take a look at that. So the Vanguard has actually done 48.73%. IGM has done 41.91%. Berkshire Focus still not too bad, 39.90%. QQQ Nasdaq ETF 39.29%, and the S&P 500 has done 31.45% with dividends reinvested. The S&P 500 is my main benchmark for Project 1 million. I want to beat the S&P 500 over the long term. As mentioned, Project 1 million did 31.75% in 2019, and so we beat the S&P 500 by a slight margin only. But I think the performance in 2019 of these indices was probably an anomaly. It will not probably be repeated in 2020. And I think in down markets or in lull periods or when the market is not so hot, that is actually when Project 1 million will outperform. So I'm eagerly looking forward to the performance of Project 1 million in 2020. Let's also take a look at the performance of another popular mutual fund called Fundsmith. Fundsmith manages about $18.8 billion. These are the top holdings in Fundsmith. This is the performance for Fundsmith in 2019. We don't have the exact performance yet, but it will be in the ballpark of about 25.63%. So, Project 1 million beat this $18 billion fund hands down in 2019. Let's take a look at the performance of the top holdings in Project 1 million. So, the stock that did the best with dividends reinvested is MasterCard, with almost 60% return in 2019. Next up is Facebook at about 56%. Next up is Alibaba with 54% plus. Next up is Visa with 43.33%. Next we have Alphabet, Google with 28%. Then we have Intuitive Surgical with 23%. We have Amazon with 23%. And we have Booking Holdings with 19%. All of these stocks did very well in 2019, even Booking Holdings. But some of these stocks had a blowout 2019, like MasterCard and Alibaba and Visa and Facebook. Going into 2020, I've told you that I feel confident about Amazon. especially since it had a low-key or relatively low-key 2019. I'm also confident about Intuitive Surgical and Google in 2020, and I expect them to do well. I expect all these stocks to do well actually. But since MasterCard and Visa have increased in valuation so much in 2019, I don't expect them to do as well in 2020. But nonetheless, I'm not going to trim any of my positions in MasterCard or Visa. The market could surprise me, and these great businesses, MasterCard and Visa, could surprise me in 2020. So I'm holding on to them at the current weighting. Of course, none of these stocks performed as well as Warren Buffett's top pick, Apple. Apple had an incredible 2019 at nearly 90%. Of course, in hindsight, I wish I had invested more in Apple at the beginning of 2019, but that is not how investing works. Investing is forward looking. Should I invest more in Apple now? As mentioned, I don't have as much conviction in Apple as I do in some of these other stocks. I feel Apple is vulnerable to technological change. If Samsung or Huawei or some other phone company comes up with an incredible new phone, I think masses will flock to that new phone. But Apple has a very sticky ecosystem and a very strong moat in that it has its own operating system and it has millions of developers making apps for its operating system. So I'm comfortable holding Apple, but going forward, I don't think it will be as good as some of these other stocks. Finally, but certainly not least, let's take a look at our eToro account. eToro will be very important for me in 2020. I am attempting to build a career as a fund manager on eToro. Let's take a look at our stats on eToro so far. So we only started our account on eToro somewhere in October. So for the year on our eToro portfolio, which we started in October, we have done about 6.67%. This is a decent performance, I think, for 3 months. As with our Project 1 million portfolio, we are confident we can beat the market in 2020 with our eToro portfolio. So this is what the portfolio on eToro looks like at the moment. We managed to pick up some Google shares at the end of 2019. Our portfolio is still heavy on cash because it is a new portfolio, but we are dollar cost averaging into the same companies that we own in for Project 1 million. We had a good start because we managed to make some opportunistic buys in Adobe and PayPal as well for this eToro account. The good thing about eToro is that it allows fractional shares and it has zero commissions. So that will allow us to be a little bit more opportunistic for our eToro portfolio as compared to our Project 1 million portfolio. If you are interested to copy my portfolio on eToro, the minimum copy amount I suggest is about 250. You should copy all trades and you should have a long-term mentality. We have about 110 followers so far, and I hope to convince more of them to copy my portfolio on eToro in 2020. I'm confident that together we can outperform the market again. If you don't have an eToro account yet, I suggest you open one up. You can use the link in the description tab to open the account, and you will get $50 to start trading if you use my link in the description tab. Please read the T's and C's. You have to make your first deposit of about $50 to $200 depending on where you live, and you have to close your first trade, and then you get your $50 bonus. eToro is a very interesting platform. It allows you to copy some of the best investors on that platform, and I highly suggest. I will continue to do more videos about some of the best investors I find on eToro as well. That's it for this video. I'm confident we will have a great 2020, learning about the markets, investing smartly, and hopefully we will outperform the market once again. Thank you for watching and have a great and prosperous 2020.